So tick pulse is one of my favorite strategies that has gone through a drawdown lately. I am working on finding a better way to trade this. There's massive counter trend rallies, and here is the example of the $1,000 profit target, $1,000 or actually $1,000 stop loss, no profit target, exit at the end of the day. And what could you do to get in at a lower risk entry point if you have a 20-point stop loss, which is nothing. I mean, this rally today from around when Europe closed, it started rallying, but off the lows, it made 27-point rally in 45 minutes or so. So 20-point rally is nothing. $1,000 stop loss per contract is nothing. So say for example you get in on tick pulse, it's short. You sit back and you wait for a some buying to take place. The tick pulse indicator is something that this strategy uses. It's not the only thing the strategy uses, but it can detect buy and sell programs. And so you see a sell program here, and so then maybe you wait for a buy program to get in at a price that's higher than the entry price, if it's near the beginning of the trade, or a price that's higher than a recent low. And so right here you see a buy program come in, and you're at this point you're about 5 points from being stopped out, 5 or 6 points from being stopped out. So you could get in on a rally, and so you don't get in at the exact point. This is kind of like our money management algorithms, a better entry algorithm. So it's hard to program this, and one of the things I'm looking at doing is using the money management algorithms to help me, is to say when this strategy is short, um, use the code from this indicator and say when you get a buy program in, come in and short it, and then the market position will determine the trend. So if it's short, the trend is down, and so it's still short. And over here you have another massive counter trend rally, this 27-point rally. You get a buy program in, but the strategy is not long here, and so you're still below your entry price though. So you have to consider the fact that you're below your entry price. So what would the stop loss be if you got in at below the entry price? Your stop loss would be greater if you went with the original stop loss. And so finding a way to short it on buy programs when it's short, and having a good stop loss, and then looking for ways to buy it when it's long on sell programs. And so for example, here's another trade from Friday, and you see this buy signal right here, and then a short signal right here, and you see these buy programs come in. So you get rallies right here, a higher rally right here in this buy program, and then another one here. So you could get in on these rollover points potentially. It's still subjective at this point. I'm not a huge indicator fan of indicators. You can pick out a lot of cherry pick trades that make things look better than they really are. Here's an example of a divergence. You get this spike up in the indicator, and then the indicator drops, but yet the market makes another new spike, and so the market spikes higher while the indicator still stays lower. So that's a based on divergences, that's an incredibly good, potentially low risk entry point where you can take a trade there and put your stop in pretty tight, and get out if it doesn't work. And so you see these points where we get these buy programs in on these rallies, and then the market rolls over. This one was a big. This rally stopped out a lot of shorts here on Friday. It's a tough day on Friday. So you see this rally right here would have actually been a good short, and so some shorts were stopped out there, but you could enter shorts there on that buy program, because that doesn't look like a big move on old charts, but on this type of volatility, the high is 26.51. This low right here is 26.32, so almost 20 points right there in a short period of time. And so this is the type of market we're in, and it's unusual to see this kind of whipsawing, but it gives you the opportunity to get in on massive moves up, short massive moves up, and buy massive moves down if you do it right. Still working on a automated trading system to do that, but this is one way you could potentially use the tick pulse indicator to take discretionary type trades while using tick pulse.